Hey YouTube family, Mike Jones here, back with another video on my channel where we talk about all things investing in personal finance with the genuine hope that we will be able to inspire someone to go ahead and get started with their financial freedom journey today. With that said, I want to go ahead and talk about my Webull portfolio today, and so we're going to go ahead and get into all the details about that and what's happened over the last week right after this. Okay, YouTube family, welcome back to my channel. So let's go ahead and get right into what's going on with my Webull portfolio this week and what exactly happened during the week with my performance, what went down, what went up, and we'll go ahead and get into that right now. So bear with me as I go ahead and open up my Webull account and start the screen recording. Alright, here's our watch list and we're gonna go ahead and get right into it. So as you can see, this is our 5-day chart. We had basically a pyramid that was made this week, and so we're gonna go ahead and get into all the details about that. Alright, so on September 29th of this year, which was a couple days ago, our account was at $10,355.63. On September 30th, our account was at $10,485.58. On October 1st, our account was at $10,644.79. On Thursday of this week, we were at $10,457.26. And on Friday, we are at the $10,401.53. So as you can see, for this week, our high was almost $10,650. Over the last month, it's been, dips and, a couple reboundings happening. But basically, there hasn't been any steady performance in the market. And we're okay with that as long as our portfolio continues to stay balanced and diversified. And this is why you go ahead and balance and diversify your portfolio. As we look at the 3-month, we see that we started low and things started to increase. So we're really not, missing out on a whole lot. The previous all-time high for this account was about a month ago. It was over $11,000. I think it was about $11,100 or something like that. So we're not too discouraged by a $600 or $700 loss. So we're gonna go ahead and get into what actual stocks are in our portfolio and what happened to them. So as you can see here, we have Tesla is still our highest gaining stock, bringing us in $1,131.59 for about 84% positive return. And as you can see, it's actually down. Each Tesla stock is actually down $30. So on Friday, we basically lost all the traction that we had for the whole week. Bruh. So and I've noticed this in my Robinhood portfolio as well. Over the whole week, we lost, money. Or over the whole week, we gained money, but on Friday, we lost everything we made for the whole week. So I saw Tesla on Thursday, I think it was about $4.45 a share. So our Tesla stocks in this portfolio are down about $35 a share. And the same thing with our Robinhood portfolio. As you can see, our second best performing stock is Snap, and that has brought in $90.35 since we had it. As I said before, Snap is a free stock that I received for a couple referrals, which reminds me, if you are interested in opening a brokerage or a brokerage account, we do have links down below for either Robinhood or Webull, which will both provide you with free stocks. If you're looking to open up a IRA today, I do have an M1 Finance account that will allow you, or a link in the description down below that will allow you to go ahead and do that. But moving on, we've received about a 215% return on our snap. So we are really happy with that. We got the free stocks at an average price of $8.37, and it's, you know, each one is at $26.44 right now. So we're just holding that. We're really happy with the performance of that, and it's actually been a surprising saving grace for us since we've had it. Moving on, we have John Deere, which is ticker symbol DE, and that has gained us about $67 over the time that we've had it, and that is about a positive 42% return. So we're really happy with that. As you can see, I don't know if you saw in my last video where I talked about DraftKings, but I am going to be doing an analysis on that, so be looking forward to that. But I previously said that I see this company getting to $100 per share and that we would buy it at that $50 rate. And as you can see, DraftKings has done nothing but steadily go up in the time that we've had it. Let's see, we bought one share on May 19th of this year and another share on May 28th of this year. So we're just steadily increasing our, you know, position in that stock because we do believe in it. And I'll go ahead and get into further detail about that in the near future. Moving forward, we do have Lam Research, which is a company in the Bay Area that I previously talked about, and we have gained $56.64, or about a 21% return in the time that we've had it. Whirlpool is the next company we have, and that is at, we have gained $33.81 with an average return of almost 25% in that company. We have WW Granger, which I previously talked about, which has gained us $30.54 for a return of about 9.29%. Our next company is a free stock that we had, which is Viacom CBS, which has given us $29.62 back, which is about 115% return. For whatever reason, the free stocks that I won't say that all of them that I've gotten through referral links has provided me with awesome gains, but there are a couple that stand out, like, you know, Snapchat and Viacom CBS. So we're really, really happy with that. And then we have Berkshire Hathaway, one share of that, and the gain has been about $24.12 with a 13% return on that. Now, I don't want to just show you the positive. I want to go ahead and show you some of the negative. So we'll go ahead and look at my worst stocks as well. As you can see, we have 100 shares of GE, which we bought, you know, on most of our shares we bought on February 28th of this year. And then we bought one share on March 5th, another 2 shares on March 5th, and then we bought 2 more shares on March 13th. And literally 3 days later, this stock tanked. And so we bought at an average price of $9.89. And as you can see, we are still down with our average price being about $6.35 in this, with $354.41 loss so far, or about almost 36% loss. But as we've talked about before, this is not an actual loss for us because we are a buy and hold investor. And so what that means is that as long as we don't sell for profit or even sell at a loss, none of those gains or losses are realized. They stay unrealized until we decide to go ahead and sell. So we don't actually take this loss, and we give ourselves a chance to have the stock actually rebound, so we don't actually lose out on that money. So that is something I'll continue to hold until I get my full amount back or more, and then I will go ahead and probably sell about half the shares that I have in this portfolio and keep the other shares, just because I do believe GE has potential. They just have had a really shaky performance since I've had them. So we'll go ahead and take some of those gains out when we actually get those gains, and then the rest we'll just hold for the long run. But moving forward, we do have Apple here. We have 10 shares which cost us about $1,125.80 at an average cost of $121.38 a share. And as you can see, we are down to $112.58 a share, which means that we have lost $88.08, or about a 7% loss in this company. And you know what? That's actually beautiful, because this gives us an opportunity, if we feel like it, to go ahead and buy Apple, one of the most solid companies in the market, one of the only ones with might even be the only one with a $2 trillion market cap, at least in the New York and US market, to go ahead and buy them at a almost 10% discount. And I can't think of better news than that. The next company we have is 20 shares of the Bank of Nova Scotia, which is a Canadian stock. As you guys know, if you've watched my channel, I love Canadian stocks, especially the Canadian bank stocks. I actually believe that Canadian bank stocks are more reliable than the ones that we have here in the US. And so with that said, we have 20 shares at an total for $849.80 at an average price of $45.56. And we are down to $42.49 in average share. And that is $61.44 loss so far. The next company we have at a loss right now, or that's not performing well, is a company I really believe in. It's actually my favorite airline stock, and that is ticker symbol LUV, or as you know, Southwest. And I have 15 shares at a total cost of $576.60 with an average cost of $41.11. And we are down to $38.44 a share, which means we've lost $40.17 in this company, or about a 6.5% loss. The next company we have is Walgreens Boots Alliance, which I believe is a super solid company that provides a dividend. And we have 5 shares at a total cost of $178.50, and we bought at $41 approximately a share, and it is down to $35.70. So this is just another opportunity for us to buy at a discount if we so choose. We have lost almost $27 in this stock for a loss of 13%. And so I'm just going to talk about 3 more stocks, and then we'll end the video for today. The next stock I'm going to talk about is Chevron, and we bought 1 share at an average cost of $96.20, and it is down to $70.72, which means we've lost $25.48 in this stock, or about a 27% return. And what I can tell you is that this is to be expected with everything that's happened this year. The economic crisis has really affected, your energy sector. And at this point, it's even affecting our tech sector. So this is to be expected. We shouldn't be discouraged by this. But I think a company that I also want to go ahead and put a position in is ExxonMobil. I think it's another alternative to having Chevron. But I would say that Chevron right now is probably the more solid stock, especially with the high dividend yield that ExxonMobil provides. Moving forward, as you can see, we have another free stock that we received from a Webull referral. So thank you, and shout out to you if you were a part of that. But as you can see, we have 4 shares of ISBC. And to be honest, I have no idea what this stock is. But they have us at a loss of about $16.65 with about 35.66% loss. But as I said before, this is a free stock, so it doesn't really affect our portfolio. If we wanted to, we could go ahead and sell now and cut our losses and still have gained, over $28 or almost $30 from the 4 shares that we have. And so we're not discouraged by that at all. But the last company I'm gonna go ahead and talk about is one that is in both of my portfolios, and that is ONEOK, ticker symbol OKE. And I don't know if I'm pronouncing that right or not, but this is a company that I do believe in. And as I've talked about previously, they are down about $44 a share right now. So we'll see what happens with that. Now, this company does have a high dividend yield, and that is something that we should be worried about. But I'm looking at this company from a pure growth perspective, and I think that there's room for a lot of growth in this company. So we will be holding on to our position until we see something that, or read something that indicates that we shouldn't have a position in this company. And we have 4 shares of this company at an average share price of $29.95, and we are down to $26.33 right now, which means we've lost about $14.52 in this company so far, or about a 12% loss. And so we're gonna go ahead and end the video right there. And I just wanna say thank you so much for watching this video, especially if you watched it all the way through. I am really trying really hard to go ahead and improve on becoming a better YouTuber for you guys, more efficient, more to the point. I noticed that in some of my videos, I can carry on about things that you might not be interested in. And so if that's the case, or if you see something that I can improve on, please go ahead and comment down below and make sure that I know, so I know exactly what my viewers want to see. I'm here for you guys. I want to bring the best content and it in the best, most efficient and possible way for you guys. So if you would do that for me, that would be really awesome. Also, if you're new here, go ahead and give us a like, and if you wouldn't mind subscribing, that'd be awesome as well. We're trying to see this channel grow. We're trying to get to 1,000 subscribers. And if you don't ever want to miss out on another video, if you would go ahead and hit that notification bell so you never miss a beat on anything that I go ahead and post. With that said, I do want to say I am not a financial advisor. I do this for mainly educational purposes, but also entertainment purposes. And I hope that I provided you with some insight, and I hope that you would start your financial journey today, especially if you haven't gotten started. If you have some stocks in your portfolio that you find interesting, that you think I should put on my watch list, I would love to hear. And with that said, thank you so much for listening, and I'll see you in the next video.